a turning point for the Iraqi Dinar and Vietnamese Dong. Welcome back to the Dinar current. Imagine waking up one morning and discovering that the foreign currency you've held for years has suddenly risen sharply in value. It's a scenario that feels both surprising and thrilling. Picture starting your day as usual, brewing coffee, checking messages, only to realize that the banknotes you've kept tucked away could suddenly reshape your financial life. Debts could be cleared, investments you once thought impossible may now be within reach, and doors to new opportunities could open overnight. For many, this may sound like wishful thinking. Yet recent developments suggest that such a shift might not be far off, particularly with the Iraqi Dinar (IQD) and the Vietnamese Dong (VND). While financial markets are always unpredictable, they are heavily driven by geopolitics, economic policy, and regional stability. Lately, unusual patterns and preparations within banking systems have drawn attention to these two currencies, signaling that something substantial could be in motion. Why analysts are paying attention? For years, the dinar and dong were overlooked by global investors. Today, however, both are attracting renewed interest. Reports indicate that banks are preparing specialized exchange facilities for these currencies, an unusual step that suggests an expectation of higher demand. Staffing expansions, extended operating hours, and upgraded transaction systems are consistent with preparations for a major surge in currency activity. This is why many long-term holders of these currencies are paying close attention. For once, the excitement isn't based only on rumors, it's being reinforced by real operational changes in the financial sector. Iraq's changing monetary strategy. So, why does this moment feel different from past speculation? The key lies in Iraq's evolving approach to its currency. For decades, the dinar suffered from sanctions, war, and instability. But Iraq is now pursuing reforms to stabilize its economy, modernize infrastructure, and strengthen global trade ties. One of the most significant policy discussions centers around re-pegging the dinar, not just to the US dollar, but to a basket of international currencies. This move would provide balance and protection against volatility, much like spreading weight across multiple supports rather than relying on a single leg. By adopting a diversified currency basket, Iraq would be signaling its seriousness about long-term economic stability. This strategy mirrors approaches used by major economies such as China and Russia. If fully implemented, it could restore global confidence in the dinar, paving the way for its reintegration into international markets. The three-stage path. Experts suggest that Iraq's plan may unfold in three phases. 1. Stage 1, opening specialized exchange centers. Facilities designed to handle IQD and VND exchanges at better rates, ensuring smoother transactions for currency holders. 2. Stage 2, pegging to a currency basket. Diversifying the dinar's value against multiple currencies to reduce risk and enhance stability. 3. Stage 3, global integration. Full international trading status for the dinar, allowing it to move freely within the global financial system. Each stage builds momentum toward credibility and long-term investor confidence. What holders should do now? Those holding dinar or dong should approach this carefully. That means keeping documentation, receipts, proof of purchase ready for compliance. Ensuring notes are in acceptable condition. Learning how currency baskets function and which currencies Iraq may use. Planning ahead. Deciding whether to cash out early, hold for long-term gains, or diversify. Preparation is essential. Much like international travel, you don't wait until the airport to gather your documents, you organize in advance. Why this matters beyond investors. A stronger dinar benefits Iraq itself. It would allow the country to sell oil in its own currency, retain more of its wealth, and reduce dependence on the dollar. Stable currency also attracts foreign investment, fueling infrastructure, technology, and industrial growth. Coupled with improved security, political reforms, and increased oil production, Iraq's financial framework is looking more solid than in previous decades. A historical perspective. It's worth remembering that the dinar once ranked among the world's strongest currencies, at times valued above $3 per dinar. That standing was lost through war and sanctions, but Iraq's oil reserves, fertile farmland, and strategic trade position remain. Today's reforms could mark the beginning of its return as a serious financial player. Looking ahead, the opening of specialized exchange centers could represent the first visible step in a much larger transformation. While instant riches are unlikely, this marks a transition from speculation to action. The weeks and months following will reveal how quickly Iraq moves toward repegging, how international banks respond, and how global markets treat the dinar. True credibility won't come overnight, it will be built gradually as international confidence grows. But for those who have waited patiently, this moment may finally offer a chance to act. Final thoughts. As 2025 unfolds, the key message is be prepared, but remain realistic. Stay informed, understand regulations, track central bank updates, and plan for multiple scenarios. Excitement should be balanced with caution, because while the potential upside is real, financial markets rarely reward impulsive decisions. This moment is about more than speculation, it's about Iraq's re-emergence on the global stage. And for holders of the dinar and dong, it may well prove to be the turning point they've been waiting for.